Namaskar, good evening. Now we will see a glass company, Asahi India Glass Limited or Asahi India Solutions in Glass Limited, AIS Glass Limited. Asahi India Glass manufactures three types of glass: automotive glass, architectural glass, and consumer glass. And in that varieties of glass are there, and they are constantly upgrading. So a lot of research goes on there, and they are trying to make the best. The board of directors includes Mr. B.M. Labru, chairman, Mr. Sanjay Labru, managing director and CEO, Mr. Santoshi Ugata, Deputy Managing Director and CTO, Chief Technical Officer. Now, in a span of 3 decades, AIS, their automotive glass SBU has grown from a single location manufacturing to 5 state-of-the-art manufacturing facilities across India, including a facility at Bawal in Haryana, Roorkee near Uttarakhand, Chennai, Tamil Nadu, Taloja, Maharashtra, and the latest plant is at Patan in Gujarat. These strategically located manufacturing facilities ensure seamless quality control on R&D, and its penchant for state-of-the-art technologies helps it to deliver breakthrough solutions to the customers. Customers want different ideas and varieties, and AIS is trying to provide all that. So it is able to easily meet the most stringent quality norms of both the global OEMs and domestic OEMs also. Market share is approximately 73% in the passenger vehicle segment. AIS's auto glass is with nearly 3 out of every 4 cars, SUVs and MUVs manufactured in India. So around 75%, let us say. During the financial year, AIS saw its auto glass products on most of the new launches, including Presso from Maruti Suzuki, Venue, Grand i10 Neos and Aura from Hyundai Motors, Seltos from Kia Motors, Altroz from Tata Motors, Triber from Renault, and Hector from MG Motors. So they are providing for most of the people quality glass, known for quality glass. Now let us also take a look at the quarterly results. December quarter, that is Q3. Net sales are 747 crores compared to previous quarter 634 crores, and year ago quarter Q3 of last year 684 crores. So year on year growth is 9.2% and quarter on quarter growth is 17.8%. Raw material costs are flat, minus 5% in year on year, plus 2.35% quarter on quarter. So total expenses also likewise 0.88% growth in year on year and 9.79% quarter on quarter. Interest costs have actually come down by 5% year on year and 9% quarter on quarter. Tax, of course, has gone up from 15 crores to 39 crores year on year, and from 21 crores to 39 crores quarter on quarter. That is, tax has grown by 154% year on year, 87% quarter on quarter. Now, final net profit is 73.91 crores in Q3, 37.29 crores only in Q2, 32.17 crores only in last year Q3. That is, final net profit has grown by around 130% year on year and 98% quarter on quarter. So that is impressive. Sales growth is not very impressive, but net profit growth is very, very impressive. Equity capital stays at 24.31 crores. Basic EPS on a face value of rupees 1 is 3.04. That also has grown by 134% year on year and 99% quarter on quarter. Market price is around 291. 52-week low is 119. 52-week high is 302. Based on the latest EPS and latest price earning is around 24. 24 is slightly high, not very high, but slightly high. But it has come down actually from historically, many of these are in 30, 35 like that price earning. Now it is 24. Volumes are reasonable, not very great, 85,000 on NSE. Book value is 53. 53 is okay. 3-year CAGR growth, if you look at that, revenue has grown just 3.8% rate. Net profit, not much growth. Operating profit also, not much growth. Price growth over the last 3 years has not been very appreciable. Will it be appreciable in the coming times to come? Let us see. Last 3 years, price didn't grow much. Asahi India was flat. But the latest results are reasonably good. Very good rather. If you look at the last 5 years, net sales 5 years ago was 2,207 crores. From there it has grown to 2,300, 2,600, 2,900 and again it has come down to 2,600 crores in the March 20 year. Raw material growth is not much. Sales have grown to some extent but not much. Raw materials also not much. But net profit has grown reasonably. From 87 crores 5 years ago to 154 crores in the last year. Now equity is 24.31, no improvement. Basic EPS annually it is 6.32. Now quarterly it is 3 plus. So it is growing slowly. Now what is the shareholding pattern? Promoters have unpledged 0.44% of shares in the last quarter. Now the total pledge still stands at 10.67%. That's not a big thing. Promoters holding remains unchanged at 54.27%. 54.27 is good, but the pledge is 10.67%. Mutual funds are there, FIIs etc. are also having marginal 1.15%. So net profit has grown, profit margin has grown quarter on quarter. Revenue has been growing in the last 2 quarters, not earlier. Increasing profits in the last 2 quarters, therefore book value has been growing slowly, steadily in the last 2 years. Promoters pledge is coming down. Now price is somewhere near 52-week high, not low. Mutual funds have decreased their shareholding. ROCE has been declining in the last 2 years. ROE has been declining in the last 2 years. ROA has been declining in the last 2 years. Cash flow has been declining in the last 2 years. So these things are there, but last 2 quarters have been very good. Price earning is a little high. But earlier it was still higher. Now the price earning has come down. So Asahi India has done well in the latest quarter and the earlier quarter also. Let us hope it will do very well in the... But of course its quality of products are very good. I mean it has to try for more exports also. Indian market is not enough for it. So it has to try for exports also. If it tries, probably it will become worth big investment. Thank you for listening. I will be back with you with another very good company.